Joining us to discuss, Bejul Somaia, a partner at Lightspeed India Partners, with a relation to Lightspeed Venture Partners,
That's right.
which we often cover here in the United States, right?
Yes, absolutely. Yeah, we started investing in India as Lightspeed actually about 12 years ago. And then as the opportunity opened up, we decided that we would start dedicated funds for the region as we saw mobile growth really exploding and leading to the internet growth that you just spoke about.
So the growth in India has been astounding. I mean, 20 million people online in the year 2000. That might be 700 million in 2020. So how do you even begin to assess the opportunities? I mean, are they just exploding, or is it pretty obvious where you should be putting your money?
No, it feels like it. And I think what's changing is at the same time that you have internet growth exploding, you have now a cycle of repeat entrepreneurs in the market that are forming from some of the more scaled companies, and you have more and more risk capital available. So you have the intersection of multiple different things happening. Macro tailwinds are strong. That's leading to a lot of opportunity. And I think that what we're beginning to see and what we're excited by is that technology is making its way into every industry. So it could be commerce and retail, hospitality. One of our companies, Oyo Rooms, is doing a great job there. Logistics, ride sharing, transportation, media. So a lot of the things that we've seen in other parts of the world, in other large digital economies, is beginning to happen in India.
Big U.S. e-commerce and commerce companies like Amazon and Walmart have taken an interest in India. Amazon has invested billions of dollars. Walmart bought Flipkart, of course, in a big coup.
Yes.
And those businesses combine logistics and e-commerce. How has their arrival impacted your job?
Yeah, I think it's a net positive thing, because for us as early stage investors, we want to build companies that ultimately will get public or will have some form of exit. So the idea that there is downstream capital or strategic investors or buyers for these companies is a good thing. One of the things I often say about India is it's an open market, so it's the world's next big digital economy. It's open, and what that means is now capital and interest is coming in from all over the world. So it could be the US and US strategics. There are Chinese strategics and investors that are getting very active, folks like Naspers. So there's capital flowing in from all parts of the world. I think that's good, provided it's ultimately used in the right way, because too much capital can also be problematic.
On the other hand, doesn't their arrival also threaten startups? I mean, Senator Elizabeth Warren calls that area around big tech companies the kill zone, where either you get bought by a big tech company or you get killed because they do it themselves.
It can. The way I think about that is if entrepreneurs in India are replicating playbooks from other markets, then you run the risk of the original playbook writers showing up, like Amazon, and running their playbook, and it's going to be tough. I think actually over time, the largest companies, the most defensible companies, the most valuable companies will be those that are built with a very India-first mentality, appreciating the nuance of that market, writing the playbook for that market. And I think when you do that, and we've seen that with some of our companies like Oyo or Byju's or Indian Energy Exchange, when you build companies for that market, usually there aren't other folks that are doing what Amazon and Uber can do.
How does investing in India differ from investing in the United States? How is your job different from Jeremy Liu's?
Yeah, look, I think fundamentally we do the same thing. We've got to identify great founders early, going after big markets. So I think the fundamentals remain the same. What great entrepreneurs need to do remains the same. But the business models will vary in those markets. I'll give you an example, Emily. For example, if you take Airbnb in hospitality, thin layer, largely technology, very scalable, doesn't get involved too much in ops. You take a company like Oyo Rooms. You need to, in a market like India where supply quality is so variable of hotels, you need to go in and fix that supply. You need to be prepared to do some heavy lifting.
And last quick question, how do you deal with the government bureaucracy, which is infamous in India for slowing things down?
Yeah, well, that's tough. I mean, in a lot of these new sectors, and I think this is true globally, regulation is always behind business models. So that is, I think, a part of our job in every market, to be honest. The new government, or the government that was elected a few years ago, is more progressive with respect to business, and so we feel pretty positive on that front.